And here he comes down the stairs to Mom's basement. Eswar Prasad joins us. How are you?
I'm doing well, thank you.
Well, I'm so happy that you're here. You know, it's very interesting. When I was growing up, and I think, not that different in age than you are, I grew up with these two television shows that were related, the Flintstones and the Jetsons. And as you may know, Barney Rubble and the Flintstones way back in the past, and then the Jetsons, this great view of the future, which I remember growing up watching the Jetsons, thinking that being able to talk to each other on television would be very cool. You know, having the ability to do the things that we take for granted right now. You begin your book by talking a lot about the past, and you start off with Sweden and with China. And would you mind beginning there with some of the innovations happening in Sweden and China and relate those to kind of the past with those two countries and how they helped us get to where we are today?
So I grew up in India, Joe, and even I was a fan of the Jetsons and the Flintstones.
Perfect.
China is an interesting part of the story because the very first paper currency that the world has ever seen actually came out in China. After all, China was where paper was invented. So this is perhaps no big surprise, but it was a big surprise to the Europeans and others at the time. And then Kublai came along and he did something quite remarkable. He issued a paper currency that was not backed by anything, not backed by commodities or precious metals or anything of the sort. So it was real fiat currency, and he made it legal tender. That is something that had to be accepted by everybody in his domain on pain of death.
When I read that, by the way, I was so surprised because I thought this idea of not having gold stored somewhere, having something backing the currency is a relatively new idea, yet Kublai Khan is not. I mean, that's a long time ago.
It was a very long time ago. It's back to the 13th century, but there was a problem. Governments after Kublai Khan in China and elsewhere were much less disciplined than Kublai was. So what happened is that many of them started realizing that they could print money at will to finance war and other expenditures. That led to hyperinflation. And very soon these paper currencies started disappearing because people realized that they were really not worth the paper they were printed on. It took a long time before central banks were set up essentially to print money, but that could be protected by an institution that people trusted. So this is where Sweden enters the story. The Swedish Riksbank was the very first central bank that was created with the specific task of printing money and preserving its value. So China and Sweden are very important elements of the story, and here is where history comes full circle. China and Sweden are the first two major economies in the world that are experimenting with digital versions of their currencies. In other words, they're not talking about completely displacing paper currencies, the Chinese renminbi and the Swedish kroner, but they're recognizing that digital payments are becoming more prevalent and central banks need to move with the times. Central banks tend to be very conservative, but in this case, these two central banks are saying we have to get with the developments in finance, and we're going to issue digital currencies that our consumers or businesses can use.
Are we going to see a time when we're 100% digital?
We are moving towards being increasingly digital. I mean, if you think about most of our transactions right now, we may use, a debit card, a credit card, we may use our phone. And interestingly, in many emerging market countries or developing countries like China, this transition is happening even faster. In China right now, when I go there, I mean, I haven't been there for the last year and a half since COVID broke out. But when I was going there, even in 2019, I would have yuan notes in my wallet, but none of my Chinese friends used yuan notes. They all used WeChat Pay or Alipay on their phones. In the US, we've stuck to the use of cash. And now the issue is that cash gives us certain features like anonymity. Anybody can get access to cash. If you want to use Apple Pay or another such digital payment system, you have to have a debit card, a credit card, or a bank account. With the sort of payment systems you have in China, you don't need any of that. You just need to have a very basic balance and you can go off and do digital payments. So I think the reality is that cash, because it is less convenient for consumers, less convenient for businesses, and less convenient for governments, is going to give way to digital currencies.
You talk about also another story. And by the way, I love that that story of you being in China and trying to pull currency out of your wallet while your friends are beating you to the punch with their mobile phone. But you also talk about, and spending just a little bit more time in history before we get to the future. I remember growing up, and you talk about coming to the United States for the first time with American Express traveler's checks. And this thing that was a fantastic way at one point to guarantee that your money would still be there and that you could get a refund if they were stolen or something bad happened to them. That's also gone bye-bye. That's completely gone today.
That's right. There are many of these things that were innovations at the time. Traveler's checks were innovations because it meant that you didn't have to worry that you might lose your cash or that cash would not be easily accepted in another country. Traveler's checks made it easy for an international traveler to go around the world and use that money, which could very easily be recognized around the world and could fairly easily be translated into cash. These days, traveler's checks have little value because essentially you go to any country, you can pull out money from your US bank account using an ATM, and practically any country that you go to, especially in the urban areas, you can find an ATM. So this is where technological innovation certainly helps in creating new products and often sweeping away the old ones. But of course, ATMs still exist and bank tellers still exist. There was the notion that once you had ATMs, physical bank branches and bank tellers would be gone, but instead they adapted. They started providing other forms of service, so they're still not gone. So technology does not always sweep away old things. Sometimes it does.
That brings up a great question. As I was reading in the first chapter of your book, you talk a lot about the past and money and what's the definition of money and how is that changing. But one word you use throughout your book a lot is this word of trust. And that in the past, we've had to be able to trust this banking system. Under Kublai Khan, we could trust that there would be a fiat currency that would work. And then as you just explained, leaders after them, those currencies became less trustworthy. What's the role of banks in the future as we move? Because I feel like as you explain how banks are intermediaries today, a lot of the transactions that we do no longer require intermediaries. And I can see based on reading your book, how we're going to need banks even less as intermediaries. You and I can get things done without these intermediaries. Do you see banks changing, or are banks going to be like Blockbuster and we're not going to need them anymore?
Banks still play a very big function in modern economies. It turns out that if you think about money, there is the money created by central banks. Those are the dollar notes we may have in a wallet or in an account somewhere. But when banks create credit, that is when they give out loans, they can also create corresponding deposits. So it turns out that in modern economies, most money creation is actually undertaken by commercial banks. We think about it as a simplistic level as banks taking money from savers and giving it to borrowers, that is people who want to buy houses, firms that want to invest. But it turns out that banks can also actually create money in the process of creating credit. What is happening right now is that one of the very profitable businesses of banks, that is facilitating payments, is becoming less important. And you can also use fintech lending platforms that would connect. Let's say you had a lot of money and I was someone with a project. You could give me money through something like Kickstarter, whereby we wouldn't have to go through a bank. So banks may start becoming less important, but that raises a big question about who's going to create the credit that banks were creating. And if they don't do it, who's going to do it? There is one prospect that we might all end up relying on the government more to create credit, and that's not a good thing. I don't think the government wants to do that. Nobody really wants that. But if banks start disappearing, much as we might dislike them, somebody is going to have to take over that function, and it's not clear who will.
So you're saying, though, banks probably just have to continue to evolve.
They have to evolve, but they're going to face some very serious threats to their very profitable lines of business. As I mentioned, the direct connection between savers and borrowers through technological platforms will undercut one part of their business. If you have central bank issued digital currencies or other electronic currencies that become more efficient payment systems, that's going to undercut another business of banks. So banks are going to face significant challenges to some of their very profitable lines of business. And if they want to stick around, they will have to evolve and adapt.
I want to ask you more about crypto and central bank digital currencies. But earlier you brought up fintech and Kickstarter. And I have to tell you, I have kickstarted far too many board games. I have helped way too many creators. My bank account is not happy with me, although I enjoy some of this work that people do. But fintech, we have had many fintech creators on the show. I love looking at the Jetsons again, the Jetsonsification of money and how easy it is to use our phone to do different aspects of our financial lives, whether it's insurance or financial transactions or investing. Where's the future headed with fintech? Do you see as an evolution of banking that banks then swallow these fintech firms and adopt some of the ideas to bring them out to a more global scale? Insurance companies swallow them up? Or do these fintech companies that now seem to be changing the game for people, do they emerge like Amazon and some of these other companies have? Facebook even?
There is a huge amount of innovation that is going to make things a lot more efficient. If you think about traditional financial lines of business, not just basic banking to get credit or for a place to put your money, but things like what you mentioned, insurance services and so on, are going to become much easier to access those markets with greater competition. You're going to see prices dropping, a broader range of products developing, and this will create competition for the existing providers who I hope will adapt and start innovating themselves. So this is all very good. The not so good part of it, as you pointed out with Kickstarter, is that if you have people without financial literacy, not that I'm saying that you don't have it, or people without digital access, now you could end up with a situation where fintech is working great for a lot of the population, but it ends up either leaving out an underserved part of the population or creating risks that some people don't even realize because they get dazzled by the technology and they feel that this stuff can only rise in value rather than fall. And we've already seen this. Yeah, you talk like the GameStop scenario.
Well, and I was going to say, even in the case of going much earlier back, you point out the early days of peer-to-peer lending, where the average person doesn't know how to run a credit analysis. So we just lend money to people because we think it's a good idea. And you say that that's even changing in fintech.
That's correct. So the good thing here again is that fintech gives us opportunities for diversifying our portfolios. And in principle, you can get a lot more information about people who you are lending to. But the problem is that there is such a deluge of information that if you don't have people who can synthesize this information, it becomes very difficult to process any of it. So we just stand back and say, oh my God, I cannot take in all this information. Let me just trust in the technology and hope that everything goes well. And the technology can have some inbuilt safeguards, but it also has a lot of weak points. And we're beginning to realize that some of these technological innovations can, in fact, create as many risks as the benefits that they provide. And if you don't educate people about these risks, eventually it's the small investors who end up getting hurt the most.
Yeah. I want to ask that, not just even further than smaller investors, about financial inclusion, because my first thought has always been that when we take payments, and as you point out in Kenya, how easy they've made it for payment systems to work, that this would increase financial inclusion. In fact, you wrote that in Somalia, roughly three quarters of people have mobile payment systems that they use, but only 15% of people in Somalia have a traditional bank account. Does this mean that we're going to see increased financial inclusion because of the role of fintech around the world?
Fintech is a great way to bring more people into the financial system because so long as you have a mobile phone, you can access digital payments, and it actually acts as a portal for very basic banking products as well. So we are seeing this happen, especially in developing countries where the banking system just doesn't reach a large part of the population. But even in a country like the US, about 5% of the population here, according to some estimates, is unbanked or underbanked, meaning it doesn't have easy access to financial services. So you can think about fintech portals as providing easy pathways. I mean, even the relatively poor in the US do seem to have access to mobile phones. So if you can set up an app that allows you through a mobile phone to give you access to payment systems, that's great. Again, there are some risks here, but I think overall the benefits are really quite significant.
I come back to trust again, right? As I'm listening to you talk, this concept you bring up over and over of trust is the fintech world going to be more trustworthy than a banking system that people already don't trust.
That's a real concern. I mean, the allure of this cryptocurrency, Bitcoin, the reason why it got hold of the public's imagination is that it promised a world where you didn't need to trust either a central bank or a government or a financial institution. The idea was such as through in effect, radical transparency. That is, people could transact using their digital identities, but all the transactions would be posted on a digital public ledger. This ledger would be maintained on multiple computers, so anybody with an internet connection could look at all the transactions using Bitcoin. That was supposed to engineer trust, or at least a way around trust. But we are finding that trust can sometimes be a little fragile. There are technological issues and other issues that make it hard to believe that without trust in a trusted institution like a central bank, financial systems can actually work well.
Let's talk about crypto while you went there. I'm so glad that you did. You seem to think that the future of crypto may not be Bitcoin, but really just the underlying concept of blockchain is really where the excitement's going to be in the future.
Yes, the idea of Bitcoin was that it would provide a payment system without a trustless intermediary, but it's not worked very well. You know, Bitcoin has very volatile values. It turns out to be relatively slow, expensive to use, and it's just not a great medium of exchange. And sort of ironically, it has become a store of value that people essentially view it as a speculative investment, even though it has absolutely no intrinsic value. So as an economist, it makes me worried. Although, when I started working on this book, if I had bought a few Bitcoin rather than spending my time writing this book, I'd be a richer man, at least as of today, as of this moment. That could change by tomorrow.
I should have done that instead of kickstarting board games too. So I'm there with you.
But, the technology is really remarkable. And what we are seeing is that it's giving way to new payment technologies. It's stimulating central banks to think about issuing digital versions of their own currencies. And it's creating a financial ecosystem that is going to be, I think, very dynamic and is going to generate some real benefits. It will turn out that we can undertake many transactions, complex transactions like buying a house, buying a car, without necessarily having to go through any complex steps, without having to go through intermediaries such as real estate attorneys and so on. So there are big changes coming. But even with those changes, I think we are still going to need the government to enforce contractual rights, property rights. So my reading is that while decentralized finance, as this is called, is going to have a big democratizing effect on finance, it is also going to pose some challenges in terms of sustaining itself without the bedrock of a trusted institution such as the government.
Well, and that was my next question, which was that, one of the reasons why so many people love this idea is getting the government out of currency, making it not a fiat currency. But it seems to me that that's kind of a fantasy. I can't imagine a government like China standing by and allowing some other currency to take hold in that country.
In fact, China's experiments with its central bank digital currency, or the digital yuan, was essentially stimulated by that. What the Chinese government found was that most people in China had begun using either Alipay or WeChat Pay, which are the two dominant digital payment systems, and they didn't really need cash anymore. So the declining use of cash in countries like China and Sweden, which were at the forefront of issuing paper currency initially, was what has caused the central banks to sort of react by saying, hey, we don't want our money to become irrelevant. We're going to basically step into the fray of the competition by issuing our own digital currency. So that's where we're going. The other interesting irony is that when you think about the sort of cryptocurrency that Facebook plans to issue, that will be a new payment technology. But there the trust comes from the fact that Facebook says that anytime it issues a unit of its cryptocurrency called the diem, it'll be backed up by a unit of the US dollar. So it's going to be a fully backed currency. It'll be a more efficient payment system. But the trust comes not just from trust in Facebook, but from trust in the US dollar reserve. So even a company like Facebook, when it issues a cryptocurrency, relies on the trust in the underlying fiat currency in order to make its cryptocurrency work.
Will that help El Salvador help their crypto experiment work because they also use the US dollar at the same time?
Well, the US dollar is used by many Latin American countries that don't have credible currencies of their own, because the governments, get their central banks to print money that devalues those currencies. I think a digital version of the dollar might certainly get traction there. Currency issued by something like Facebook might certainly get a lot of traction there. But will Bitcoin, as Salvador is proposing to do, really serve as a viable medium of exchange? Bitcoin, as I said, is not proving to be a great medium of exchange. It's just much too volatile in value. And for El Salvador to sort of assume that using Bitcoin will solve any of its economic problems is, I think, an unrealistic hope.
You end the book by looking at it from a Jetsons perspective, that the future could be incredibly bright, but you end it with this word perhaps, right? How do you see the future of money, and what surprised you as you were writing this book?
So one thing that's becoming clear is that the era of cash is ending. We are going to move towards central bank digital currencies and, various forms of digital payment systems, including stable coins and other cryptocurrencies. What I had not anticipated when I started working on the book was that the change in the form of central bank money would come so soon. It turns out that just in the last year, a large number of central banks around the world, not just China and Sweden, but also Japan, India, Russia, Nigeria, have all indicated that they already are or are about to start undertaking trials of their own digital currencies. But what I had also not fully anticipated is that this could have some unexpected effects. Not only could we end up in a world with much less privacy in our financial transactions, but we could end up in a world where, rather than democratizing finance, we actually end up with the already economically privileged, the rich that is, getting even more of the benefits of these financial technologies. And why is that? Because even if finance is more democratic, digital access, financial literacy are still very unequally distributed. So it could make some problems even worse than they are right now, unless we are careful about how we use these technologies.
I could ask you questions for 20, 30, 40 hours about the future. I'm so fascinated by what you do. I would love to go into all that. And our listeners can. The book is called The Future of Money, How the Digital Revolution is Transforming Currencies and Finance. And we covered maybe 2% of what you cover in the book. And I'm assuming it's available everywhere, correct?
Indeed, at all good bookstores.
Awesome. Only the finest bookstores, right? Thank you for hanging out with us for a few minutes and talking about the future of money. I really appreciate it.
That was fun hanging out in your mom's basement, Joe. Good talking to you.
Well, now it's time for cookies, so that's good.
Okay.